Anything that would look as a serious threat now, because tariff flip-flops are happening, negotiations are on, although the 25th August talks have been postponed, so we are staring at a 50% tariff starting from the 27th of August. But how big a risk is that? Do you think the market has taken that in its stride? Because 50%, give or take, may not stay, right? Because that won't be beneficial for US as well. So here on, any big threats or risks that you see aside of tariffs for the market?
Yes, of course, I see one risk, which is a structural risk. How would Fed roll down its balance sheet? That's
Hmm.
what is going to impact the emerging market flows from index funds as well. Today, FIIs, the discretionary FIIs have sold, the prop FIIs have sold partially, the index fund FIIs have bought over the last 2, 3 years. So one risk which I see is the Fed reducing its balance sheet. If it actually it can't do QE tapering, QT. Point one and point two is if they hold their current balance sheet for 6.5 years, also their balance sheet size reduces to half because that's the modified duration the Fed is running in its balance sheet. So I would be very keen to see 1.5 years how is Fed trying to manage the balance between inflation, interest rates, and their balance sheet target of coming down. So I think that's where the large structural risk lies to all emerging markets. And I don't see tariff as a risk at all. And that's what I've been stating. If Trump tried his best to create some degree of panic in Indian capital markets, he couldn't do it. 2-3% move down. He was expecting a 10% gap down with these statements to put pressure on us, but that didn't work because FIs have already sold. We've seen about 5 lakh crores of outflow. The Indian domestic guys have bought in about 15 lakh crores over the last 4 financial years. And in my opinion, in the next 8 years, you will see 50 lakh crores of inflow from domestic institutions. So index fund investors of FIs will keep buying. So coming back to the point you made, what are the risks? The whole inflation, interest rate, and balance sheet balance is the one thing. If that goes wrong, there is going to be some more outflows from the emerging markets, and that's the risk I see, which can put pressure on most of these markets over the next 1, 2 years.